Okay, hi everyone. Welcome to today's webinar. So for today's session, we're going to be talking about MACD. Just curious, let me know in the chat if you guys use MACD as well. Or if you haven't, just let me know as well. Okay, so let's just get started as well while you are letting me know in the chat. Okay, let me start my recording. Okay, so as per usual, we're going to start off with a risk warning and disclaimer. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. So I'm Melanie. I'm an investment analyst from Everest Fortune Group, who were finalists for Best FX and Equity Research in the years 2019 to 2021. So here's our agenda for today. We're going to first talk about what is the MACD, interpreting the MACD, some trading strategies, and then how to combine MACD with your trading strategies. Okay, let's get started. So firstly, MACD, what exactly is it? So MACD, or Moving Average Convergence Divergence, is a popular momentum indicator that's used by many traders, and it's basically used to identify trends, momentum, and potential reversal points in the price of an asset. It contains two main components, the MACD line and the signal line. Okay, so to understand the components, firstly, the MACD indicator has four components. The MACD line, which is the difference between two EMAs, which is exponential moving averages, typically calculated over 12 and 26 periods. The most common formula for this is the 12-day EMA minus the 26-day EMA. Then we also have the signal line, which is a 9-day EMA of the MACD line. And this helps in smoothing out the MACD line and generating trading signals. And how exactly you use MACD typically is by plotting out the indicator using a histogram. But of course, this is a built-in tool for most charting softwares. Like if you use TradingView or MT4, most of the time the histogram is drawn for you. And of course, we have the zero line as well. Okay, so here's what our MACD looks like. We have the MACD line, which is the blue line, signal line, which is the orange line, MACD histogram, and the zero line. So when the MACD line crosses over the signal line, it indicates a bullish signal, suggesting that the momentum is turning positive and it might be a good time to consider buying. I'll show you over here. Okay, in this case, we're looking at selling first. So here you see MACD crossing over the signal line. MACD again is the blue line. The signal line is the orange line. So MACD crosses over the signal line, crosses below the signal line, indicates a bearish signal, suggesting that the momentum is turning negative and it might be a good time to consider selling or shorting. You can see here as well from the histogram. Typically, when this happens, your histogram will turn red and it'll form below our zero line. So when the MACD line crosses over the signal line, like this is a bullish signal, and you can see the histogram also turns green. So this is a very easy way to use the MACD. Every time you're done with your analysis, you just pull out your MACD indicators and you can see exactly what the indicator is showing you at that point in time. Okay, so this is the example of a buying signal. You can see the MACD line crossing above the signal line, which indicates a bullish signal. Okay, here are a couple MACD trading strategies. Firstly, we have the lagging indicator, fixed signals, crossover strength, and potential reversals. Okay, firstly is the most straightforward way, which is through your entries. So a buy entry obviously is when price is giving you a bullish signal, represented by the MACD line crossing above your signal line, and or simply by looking at the histogram here. So we've indicated all of the times that the MACD line has crossed over our signal line and given us a buy entry signal. Okay, second is your sell entry. Again, this is pretty straightforward. Basically, when the MACD crosses below the signal line, that is your sell entry. Okay, an exit would be between these two areas as an example. You can see where we've placed our resistance as well as our support. We have a bullish indicator here. So the minute that price crosses below, that's your exit sign. Okay, again, we have some more examples here. Your exit basically occurs in combination with your support and resistance levels. So when price crosses below our resistance over here, you can see on our MACD that price is also becoming a bullish signal here. Also between these two areas, from this resistance to the support level is giving us a bearish signal. And we can see that once price rebounds off of this level, that's our sign to exit. Okay, combining MACD with your trading strategies. Firstly, what we want to do is to identify the trend, and then add support and resistance levels, crossover strength, and then keep an eye out for any potential reversals. Okay, that's it for my slides. Now let me pull out my charts so that we can take a look at some charts. Let me know in the chat if you guys have any requests for any charts that you'd like me to look at, and we'll look at some MACD as well. Okay, I have a request for AUD. Now let's take a look at AUD. Okay, so to start off, let's follow the rules on this chart here. Okay, so first step is to identify the trend. So what I like to do typically is to look at the higher time frames first so that we get an idea of where prices are headed towards. So you can see prices are moving in this downtrend. Okay, it's also moving in this descending trend line. So what makes a valid trend line, just to recap, is if there are at least three touches on the trend line. Okay, now that we know it's typically moving in a downtrend, now let's look at our daily time frame. Okay, so this is not a valid trend line because we don't have three touches, but we can kind of see prices moving in a downtrend. Okay, so we've identified the trend, we've looked for any support or resistance levels, or rather, we've looked for any trend lines or trend channels. Okay, but we don't have any. So now what we're going to do is add our support and resistance levels. Okay, so firstly, I'm going to place my first resistance up here, or maybe here. Okay, and then I'm going to place my pivot here. So this is an overlap level because we have what an overlap basically means is if there are swing lows as well as swing highs that respect that area. You can see over here we have a lot of swing lows and swing highs. So what this means is that there's basically a higher chance that price is going to react off of that level again. Okay, and I'm just going to place my first support over here. Okay, now I'm going to go in with some Fibonacci levels to support these levels. Firstly, I'm going in with a retracement. So retracement uses 5 levels. You can see the 23.6, 38.2, 50%, 61.8, and 78.6. And I can see that my 61.8 lines up with my pivot. So I'm just going to keep that. Okay, next I have a extension level here. Okay, you can see so for an extension, we're using the levels that are above 100. So namely let me just zoom in, namely the 127.2 as well as the 161.8. So my 161.8 lines up nicely. So I'm just going to keep that here. Okay, and for this technique, we are looking for this kind of Nike shape. If it's inverted, it would be something like that. Okay, and next, let me gonna go in with a projection here. Mm, okay, I'm gonna add an intermediate. Um, actually, I'm gonna place my first support a little bit higher up, which is closer to where price is at now, over here. Okay. Um, see if we have a projection here. Okay, no. Okay, I think that's all the levels that we have for Fibonacci. So let's go ahead and look at some indicators. So I'm expecting price to reverse off of this level here. Okay, and hit up towards my first resistance. Because of the overlap area here. Okay, again, you can see I'm trying to pull it back as far as I can without cutting too many bodies of candlesticks. Okay, yeah. So this is a pretty significant level, and I can see that it lines up with the 61.8 as well. So I'm expecting price to bounce off and hit back towards my first resistance. Now let's look at some indicators. So I like to start off with MACD and Ichimoku because at one glance you can see exactly what the signals are. Okay, and here you can see that price is moving below my Ichimoku cloud and it's also moving, giving us a bearish signal on my MACD. So if we look at our MACD, you can see our MACD line, which is the blue line, is crossing below our signal line, which is the orange line. So it's giving us a bearish signal. Okay, so we might actually see it continue to drop down here. Okay, but let's take a look at some other indicators as well. Yeah, I'm actually going to label this as my um, intermediate support instead. Okay, and then, so this is my intermediate level. Because I realized that this is an overlap. We have a swing high and a swing low here. And all of our indicators are giving us a bearish signal. So we might see it continue to drop towards this support. And we might continue to see it drop below that towards our first support. Okay. Um, Now let's take a look at, do you guys have any other requests or any questions? Okay, if not, let's take a look at euro dollar. Okay, so same thing, I'm gonna look at the higher time frames to identify the trends. And you can see price is moving in a descending trend line here. Okay. Now looking at our daily time frame. Let's see if we have any trend channels. Okay, no. Okay, so let's just go ahead and add our support and resistance levels. So firstly, I'm gonna place my pivot over here. Okay, so my pivot's over here, and it's in line with some swing highs and some swing lows as well. For my first resistance, I'm going to place it up here at this swing high. And then my first support just here at the swing low and swing high. Okay, now going in with some Fibonacci levels. Okay, I'm going in with a retracement first, and you can see my 61.8 lines up with my pivot. Okay, and my 78.6 also lines up with my first support. Also line up. Okay, so you can see that I have 78.2, 78.6 lining up with my first support, and also two that line up with my pivot. So I'm expecting price to continue to drop towards my first support. Okay, now let's look at, I think we have a retracement here as well. You can see my 61.8 lines up nicely with my first resistance. Now looking at some indicators, again, Ichimoku and MACD, price is moving below the Ichimoku cloud, so it's giving us a bearish signal. And our MACD is also giving us a bearish signal. So you can see on our MACD line, the blue line is crossing below the orange line, which is the signal line. So it's giving us a bearish signal. So it supports our bearish analysis that price is going to continue to drop from our pivot towards our first support. Okay. So if you're unfamiliar with Fibonacci, so I mentioned some Fibonacci techniques and also what you should look out for really briefly. But if you're new to Fibonacci, you're not sure what I'm talking about, you can go ahead and take a look at this website. So it's just theforexarmy.com, and we have a bunch of other trading guides as well, completely free, and trading tools, also free. So you can go ahead and take a look at these. But to start off, I just wanted to talk about this Fibonacci guide. And you can take a look at the videos, retracements, extensions. Extensions are the Nike tick shape that I showed earlier. And some things to look out for, clear market structures. And how to use some of the Fibonacci techniques that I'm using in this webinar. So I've already gone through the retracement levels. So the between 0 to 100 levels. But yeah, we also have expansions, which are the negative levels. So you can take a look at those. We also have some examples of a Fibonacci confluence, which I briefly mentioned earlier as well. It's basically when two or more Fibonacci levels line up in the same area. That's a confluence area. And price is likely to be attracted to and react off of those levels. So it's pretty important technique to learn. Also have some trade management guides. So for example, you place your stop loss beyond a key Fibonacci or resistance area instead of before it. And the reason for that is because price, as I mentioned earlier, is attracted to such strong areas of confluence. So you might get stopped out before the market reverses. And your take profit should be placed before so that when price reaches that area, there's a high chance that it won't be able to go beyond it. But yeah. So yeah, feel free to check out this website. I'll just pop it into the chat and you can take a look at it on your own time. Okay, just wanted to briefly talk about that since I am supporting my support and resistance levels here with a bunch of Fibonacci levels. So yeah. We also have some webinars on our Fibonacci series where we talk in depth about how to use each of the Fibonacci techniques. So stay tuned for those. But yeah, I'll just briefly talk about what to look out for, and some different techniques that are relevant to the charts that we're looking at. Okay, any questions or any other requests? Any other charts that you guys would like to see? Okay, shall we take a look at gold? Okay. Same thing. I'm gonna start off with the higher time frames. Weekly time frame, you can see price is definitely moving in an uptrend. Okay. Now taking a look at our daily time frame. Um, okay, also moving in an uptrend. Okay, and let's go ahead and add our support and resistance levels. So I'm gonna place my first support over here, and I'm gonna place my pivot up here, where price is currently at. Okay, and since we don't have any previous swing highs for reference, I'm gonna use my Nike tick strategy again. Mm, let's try a projection. Okay, for projection, we use 100% as well. So these three levels. Okay, and I'm going to place my first resistance at this level here. Um, okay, earlier I wanted to use this extension as well. You can see the 161.8 lines up with my pivot as well. Okay, so over here I have this support level in line with the Fibonacci. I think I have another projection here. Yeah. Okay. So you can see my 61.8 and my 100% line up. So these Fibonacci levels don't have to line up exactly in line with your support and resistance levels, because we're looking for confluence areas. So as long as they are kind of close to your horizontal levels, that's good enough. Okay. So here I'm wondering if price is going to drop down or if it's going to continue upwards towards our first support, our first resistance. Okay. Because of this confluence area, that's why I'm thinking it might drop down instead of continue in the upward trend. But we typically will recommend to follow the trend. So let's pull out some indicators to support our analysis. Okay, price is moving above the Ichimoku cloud. MACD is also giving us a bullish signal, so it supports our bullish analysis. Now looking at RSI. Mm, okay, RSI isn't telling us much. Let's look at Bollinger Bands. Okay, you can see price is moving above the upper band, so it's also support giving us a bullish signal. Okay, so yeah, so when you're using the MACD, you shouldn't use it alone. You should use it in combination with your technical analysis and also other indicators to support as well. Okay, do you guys have any questions or any other requests? Any other charts you guys would like to see? Okay, if not, that's I think it for today's webinar. Thank you guys so much for joining me today. I hope you guys found this session helpful. And yep, I'll see you guys again next week. Thanks everyone. Bye. Thanks guys.